Friday, August 1st, 0804 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We just finished the month of July, whole month of trading days. Going to look at the monthly charts. Look at what made new highs for the year, new highs for year to date. We'll look at the stock indexes, all 6 of the major ones. And we'll look at the 11 sectors of the S&P 500 to get the breakdown. Is the market well balanced right now, or is most of the money going to the very few, which is not a healthy market? First, we'll start off with the indexes. These are the cash index. They have stock ETFs on them. You could trade on them. On the ETFs, S&P 500, SPX, the yellow horizontal line, top right. That was the high of the year, the prior month. And last month, the end of July, we broke above that new high for the year. That's good. That's healthy to see the major index, S&P 500, is the index investors that use their own money, manage their own money, as well as institutions that manage other people's money, compare their performance with. After that deep dive this year, you notice this candle, smaller trading range, the height and length. Yep. Use less energy to get up there in the past months. With the prior year, much more healthier, much more calmer, that prior year. And then coming out of this bottom, much more calmer. Here, a lot of volatility. So comparing this new high for the year, let's look at the other indexes. The NASDAQ 100, which is part of the S&P 500, new high for the year. Look at the volatility, just the same. Yeah, this is part of the S&P 500. Dow Jones Industrial Average did not take out the high of last year yet. Nope, it's underperforming the S&P 500. It's part of the S&P 500. Did make a new high for the year compared to these prior months, but didn't take out the high of last year. It's called a divergency, where you have the other indexes, new highs for the year, breaking out the highs of last year, and this one not. Little insight, the Dow 30 is the 30 largest publicly traded companies in the United States. So that's a sign they're less healthier than the broad market. They have the larger weighted average in the markets. The Dow Transports, yep, way below the highs of 2021. Here we are right here, how we closed. Closed below the high of the year, struggling. The Dow Utilities broke above the high of last year, outstanding. So we can remove that, making a new high for the year. The Dow Utilities, also part of the S&P 500. And this index is very different than the other stock indexes, because these companies in here pay dividends, larger percentage of dividends than many other companies in other indexes. So that means this is considered the defensive index when people don't think the stock market's going to have growth or growth is going to slow down. Some people, some institutions, some individuals gravitate to this index because they rather receive some kind of yearly dividend, like a savings account has, like a money market has. And they want to get that extra money because, again, this typically is not a growth in stock company index companies. Yeah. Now, two things can happen here, which is, okay, the stock went higher because more buyers are buying it, but it doesn't mean the companies are performing all as well. Again, it's showing the sign that people are going to defensive ones. They're still in the stock market, still exposed to investing, which has higher risk than savings. but it clearly shows they expect growth to slow down. This is part of the S&P 500. This is the Russell 2000. This is not part of the S&P 500. It's a bunch of small companies. Yep, it's still below the highs of this year. Still below the highs of last year. It's underperforming the market. That's not healthy. So you just got some insight. Very different, the indexes, how they're performing. Let's go to the sectors. See where the leadership is in the sectors, how broad it is. Again, the S&P 500 is broken down into 11 sectors. One of them, technology, new high for the year. No surprise. It's very much similar to the NASDAQ 100. Technology. Healthcare. Yeah. Underperforming from last year, near the lows of this year. Not good. Financials, no surprise. New high for the year. Good economy, bad economy. The banks have a business model they are doing very well in, especially the ones that made it through the mortgage meltdown crisis in 2007, 8, 9, 10, 11. Yep. Very interesting too, because a little candle that formed, little body dodgy on top of here, that's suspicious. Potential means two things. It means potential halfway or potential reversal. It also means indecision. So I would be situation aware. This may be setting up for a retracement, may be setting up for a sell-off, a pullback, whatever word you want to use. That's an opportunity for trade ideas. Consumer discretionary. Underperforming this year. Yeah, new high for the month, but underperforming this year and last year. Communication services, new high for the year. Very similar to that other candle I showed you in financials. Little tiny body, big wick top and bottom. Yeah, dodgy, indecision, potential reversal. Also potential halfway to the upside. Industrial, new high for the year. Now these ETFs, these indexes, ETFs, they're made up of several companies. So one could look for all the companies in them, indexes, ETFs, and see which ones are the better ones and try to even outperform this, if that's your style. Again, each of these stock ETFs have different number of companies in them that are listed. Consumer staples. And since last year, up here, look at this, huge consolidation. Broke the low of last month. Energy, higher high, higher low, way below the highs of 2014. Below the highs of last year as well too. Utilities, new high for the year. No surprise, you saw that in the index also. Real estate. Did make a new high for last month. Way below the highs of last year, 2021. Yep. And again, those are big wicks on the top. They'd be wicking. Potential pullback to the downside. Basic materials. Did make a new high for the year. Still below the highs of last year. Underperforming. Again, a lot of these are underperforming the S&P 500. In many ways. They are below the highs of this year, and they're below the highs of prior years. Oops. So those are the 11 sectors. That's how things are occurring. That's the situation. Not everything is making new highs of the year. The market is less healthier when the majority of the buyers are going into very few. That's not sustainable. History has shown that in the past years in the markets. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.